budget and volatility has definitely eased out. But look at the kind of market construct that we're actually receiving this budget in. Kunal, hi, morning. What's it looking like after reading through yesterday?
So good close till 3:30, but not a good close till morning 6 a.m., 7 a.m. But I think that's how the markets have been. They've been tight. There have been times when our markets have not performed very well. The global markets have been in full song. But I think yesterday was a day where we saw the first round of a volatility as such coming across various asset classes, not just restricted towards the equity indices across the globe, but even to the commodity asset classes. So I think in that context, maybe I think we could be in for a bit of a pause over here for the index. But it's been a spectacular last 3 days of recovery for the index. So it's not just a 500-point odd recovery for the Nifty, but I think it's the market breadth which has opened up quite well. Sector participation which has come very well. We were so much dependent on the bank Nifty and the metal index to try and show signs of strength. But now we have almost 2 or 3 other sectors which have sort of added to the push and the momentum on the indices. You have the PSUs, you have the energy index which has done phenomenally well, as well as the defense pack as an overall over the last 2-3 days. So my sense is that with the market breadth opening up, better sector participation, there could be a possibility that we may probably try and absorb this intraday move very quickly. But the only one very important pattern which I saw yesterday was also shift towards the private sector banking names. For the first time, I think in the last many weeks, we saw private sector banking stocks showing more resilience as compared to the PSU banking names. So my sense is that maybe yesterday was one of the first signs where the money is probably moving out from the PSU banking names, some sort of a profit booking which could be there, and private sector banking stocks, and especially the larger cap names, they were the ones which start to show signs of strength and recovery.
Kunal, what about this shake-off that you had in precious metals overnight? Does it seem like a one-day move, or could it be more sustained and deeper than what we saw overnight yesterday?
See, what happens is, with every asset class, to try and define a top for the asset class, the asset class keeps on going into a corrective mode. There is a very sharp correction. It tries to absorb more buyers because people who've missed out on the earlier rally for silver, they would immediately want to get in. Yeah. The prices would keep on moving up higher, keep on making new high. But the number of certain intraday corrections is a clear definition that we are heading towards a top in the asset class. And it may not be a rosy top. If you go back to 2024, 2024 August was one of the periods, first week of August, where there was almost like 1,000 to 1,500 point correction immediately, which happened on the index. Then came a new high for the index, about 26,000 mark. And then we all know what happened in the next 1 year. So most of the asset classes, most indices, most stocks and sectors, they have exhibited this pattern that before forming a top, there is a major round of volatility which comes in. Traders who have missed out on the earlier leg, they tend to participate in because they believe that now it's available at a cheaper price, 10-20% discount, but then they get trapped into that kind of a last bull.
Kunal, if you look at Nifty Bank from a foreign investor's point of view, we saw some kind of short covering there. Open interest coming down yesterday. As you mentioned, that private sector banks, now we are seeing some kind of buying coming back into them. Do you see that sustainable, or is it basically that there has been a lot of selling which has happened in the last 2 to 3 weeks in private banks, and there's some bargain buying which is coming back into private banks?
So I think bargain buying is the best word over here, Sajid, because what happens is we're too much skewed in terms of the PSU bankers and the private banking names. And there had to be a point that if the markets are gaining recovery, gaining strength, confidence, then the private sector banking stocks had to show some signs of strength. And in fact, yesterday, I would actually believe that Axis Bank came out to be one of the better leaders in terms of trying to guide the entire move towards the private sector banking names. And then it was followed by a good supporting move from the likes of ICICI Bank, mild recovery for HDFC Bank from the intraday lows. So there were those initial signs which was there. Sector rotation is a phenomena which takes maybe weeks, if not days, for sectors to try and come back, into favoritism from a global investor perspective or even from a fund perspective. So yesterday was one of the first signs. I would believe that you might probably want to just wait for maybe another couple of days for these signs to stabilize. But if we start to see private sector banking stocks relatively outperforming the PSU banking names, say for the next 1 week, 10 days, then it's a clear indication that the money is moving from the PSUs to the private.
Kunal, your picks in this market?
So one buy call, one sell call, and the buy is from the private sector banking names, Axis Bank. In fact, 2 days back when the stock showed a correction post results, yesterday the stock managed to absorb all of that negativity and come back into a good positive closing. So would look out for targets in the range of 1440 for Axis Bank. Stop loss to be kept at 1360. And apparently Canara Bank was one of the stocks which was beaten down significantly. The stock formed a bearish candlestick pattern on closing basis yesterday, just around that 150-51 mark where it closed. So would look out for targets in the range of 145. Stop loss at 155.
Right. Okay, on that note, let's take a very quick break. When we come back, earnings, lots of stocks in news we'll address.